Hi, I'm Wyatt.
And I'm Grace.
And you're listening to our dad and your host of the Vacation Rental Revolution podcast.
What's up, guys? Welcome to another episode of the Vodacy Vacation Rental Revolution podcast. I'm your host, Sean Moore, and today I'm really excited. We've got a special guest and one of my top advisors and a great friend at this point, and his name is Mike Pine with Pine Co CPAs. Mike does all of our taxes and is really a specialist when it comes into understanding tax planning and using taxes actually as a wealth building strategy. And I know that's kind of an odd thing for me to say. I know it's probably not for Mike, but for me, that was a concept that I never really understood until, recently, that tax planning is really a great wealth building strategy. And we've got some really fun things and some pretty great advantages on the short-term rental side of life. So I asked Mike to join us today on the podcast, and we're going to dive into some of that with him. So Mike, thank you for joining us and welcome.
Thank you. Thanks for having me. I really enjoy working with you and a lot of the Vodacy members. And you're right. Taxes are a great way to build your wealth.
Awesome. Yeah.
If you do it rightly.
If we do it correctly, right? I know you talk about this a lot, Mike, and it was a concept that really, that I started really latching onto and was introduced to from you is, tax planning versus, being proactive with your taxes. And tax planning is critical if you really want to take advantage of all of those different opportunities and incentives and loopholes and things that we can do with the tax laws in place and use it as a strategy instead, where most people are just reactionary. And I was reactionary for a lot of my career.
Absolutely. So when you consider the tax code, less than 1% of the entire tax code, that's 80,000 plus pages of documents. Less than 1% of that tax code actually applies to the levying of taxes. The other 99+% all apply to incentives that the government's trying to incentivize us to help grow the economy, and those provide us tax opportunities.
Yeah, it's really exciting, and we've seen it firsthand with our group. In fact, the title to this episode is how Uncle Sam can pay your down payment on your short-term vacation rental. So we've seen it effectively reduce your tax liability by more than your down payment amount on these properties in that first year. And so that's really exciting because you're basically net zero into these properties. And that's one thing that I really started to realize recently, the last few years of my career, was when you really pay attention to high net worth individuals and wealthy people, and they have access to the same things that we all do. Their understanding and their teams and their advisors understand it at a deeper level and understand how to take advantage of that 99% of some of those things written down instead of just being reactionary and operating on the surface level, really understanding the back end of all this. It's hugely beneficial. Let's unpack that a little bit. Let's take a 30,000 foot view, if we don't mind, and really let's talk about just that concept. And if you don't mind, I'll just ask you questions along the way, but I'll let you, I want to hear from you what that looks like. If I came to you, Mike, and said, hey, Mike, I'm really thinking about investing. I heard this guy, Sean, on a podcast. And, he said that some of his members and, people that they're working with you are effectively able to get reduce their tax liability by the amount of a down payment on a house. How does that happen?
I'll use an example of an actual client of ours last year. He was a physician, made super high wages, had no way to offset his income. He was a W-2 physician, was making over $1 million a year. And he found a property just outside of Destin. It was a $1.1 million property. He bought it with $110,000 down, 10% down. Ended up getting a tax deduction of almost $400,000 and reduced his taxes by $140,000. So he got a $140,000 reduction in taxes. He put $110,000 down on the house. The government subsidized it, paid for his down payment, and gave him $30,000 to do. It's real. It happens. It works.
So let's unpack that. If I was in that situation, what would be my steps to do something like that? Like what does it take to be able to put something like that in place? Is it available to everybody? Is it limited to certain situations? Like, how does that work?
It's mainly available to anyone, as long as you're paying taxes. If you're paying high taxes, then you get the tax benefit. If you're not paying taxes, then it doesn't really work.
You're not getting a refund for your down payment.
Right, exactly. So, I mean, to start off, I know it sounds self-serving, but you need to get educated about the process and about how to run a vacation rental. We've had lots of clients over the years that went into this willy-nilly, didn't educate themselves. They bought one, they got the great tax benefit, but it never cash flowed positive, being costing a lot of money. So you don't only want to just get a tax deduction or tax reduction, you want to provide yourself positive cash flow and get a return on your investment. And that's where this can be so powerful. By getting the tax benefit to pay off a down payment on a property and turn it into a income generating and wealth building asset for you is awesome. So start off with the education. And once you do that, then you need to line up financing. So as we've talked with a lot of people in your group, you can get 10% down financing on a vacation home. You don't have to pay the 20 or 25% that most mortgage brokers will tell you you need to do for a business property. You find a financer, 10% down. You find a good realtor, hopefully someone that's focused on vacation rentals and knows what they're doing. You find the property, run the due diligence on it, and you realize, hey, this is going to make money. And you get the financing, you buy it, you operate it, you spend material participation time, which we can get more granular later on in the cast. As long as you actively and materially participate with the property, then you're eligible for this deduction. Now, the big deduction that you get in this first year comes from what we call bonus depreciation. I don't know if you want to get real granular into it right now, but basically,
let's explain what bonus depreciation is and why that would be the case.
Sure. So every asset has a useful life. The IRS says a residential property, real property, has a 27.5-year useful life. So what they let you do, it's depreciation is this magical deduction. What they let you do under normal circumstances is take 1/27.5 of the cost of that building or property and take that as a deduction each year on your tax return. But that's over 27 years. It's not a huge deduction if you get it that way. So bonus depreciation allows you to depreciate 100% right now for this year and next year, and it starts going down in 2023 and phases out over a few years. But bonus depreciation law allows you to take an immediate 100% deduction on all assets that have a useful life of 15 years or less. So a residential real property has a 27.5-year useful life. But in that residential real property or in that vacation rental, you have things like countertops, you have things like flooring, you have HVAC ducting, you have wiring, you have fixtures, you have all kinds of things, appliances. They all have a useful life of less than 15 years or less. So you go when we find a cost segregation engineer. What they do is they go in, and it's basically an engineering study, but they pull out using IRS prescribed and allowable methods. They pull out all those different components of the property. And generally speaking, for a freestanding single residence property, you can get between 25 to 35% of that property, the value as 15-year or less property. So you buy $1 million property, not counting the land, we can't depreciate land, but you buy $1 million property, you're going to get somewhere between $250,000, $350,000 allocated to short-term life assets, shorter than 15 years. And those you get to depreciate immediately in the tax year, in the year you place the property into service.
And so when you depreciate them, so you take that $250,000 or that $300,000 depreciation as a bonus depreciation, then what do you do with that? What does that mean? What does that dollar amount mean?
That is a deduction on your tax return. And again, if you actively participate in this and qualify for material participation rules, it reduces your income by that amount, by $250,000, $350,000. So if you're paying a high tax rate, say you're paying 37% taxes, next year it's going to go up to 39.6. You're paying a high tax rate. Whatever that $300,000 or $250,000 or $350,000 is multiplied by that 37%, that is your reduction in taxes. And that's where we get this huge benefit, huge reduction in taxes and get your down payment paid for in most cases.
Yeah. So that's how you get, let's say $1 million property, you put the 10% down. Let's just keep the numbers easy. 10% down, there's $100,000 down payment on that property. I make $300,000. I get a $300,000, depreciation, bonus depreciation from that property. I have a taxable loss on my taxes to offset my $300,000 of income. I'm essentially paying a net zero instead of $100 and something thousand on a 37% tax rate. And now instead of paying the Uncle Sam that $110,000, I was able to use that and keep that in my pocket for my down payment on the property I just bought. And so I have a net zero into the property. If I didn't buy it, I would have paid Uncle Sam. If I did buy it, I own an asset that's producing a cash flow producing asset.
Exactly. So it really works. It's exciting to see. I've got clients that come in and they're asking about this. They don't believe it. And when they file that tax return and they get that tax refund and it's more than their down payment, they're like, wow, this is amazing. And it really is amazing.
It's awesome. I mean, we've seen it over and over and over again, and which is why we get so excited about it. And I wanted to have you on this episode because it's not, this isn't something you're going to go do by yourself. I mean, most people you're going to need an advisor that understands this. Your tax advisor may have never done anything like this. And so, at the end of this show, we're going to make sure you all have the ability to get a hold of Mike and his team and where they can, he's going to be gracious enough to offer a free consultation so you can talk about this if you're in a situation like this. But if you are a high income earner and you're paying taxes, real estate is a great way to be able to write off against your other earned income. And that's a key point too, right? Mike, most people kind of have a general understanding that real estate is a good tax write-off and a good tax. It can serve a lot of purposes on the tax side, but a lot of times those losses are only available to be taken against other passive income, not against earned income, correct?
Correct. And so a lot of people understand that real estate losses or real estate deductions might not be available to them because they're not real estate professionals. And That's true. If it's a real estate professional activity, you can only utilize those losses to offset other income if you're a real estate professional. And that's a hard thing to achieve for people who have a day job. It's almost impossible if you have a full-time day job.
Yeah.
So the cool thing about short-term rentals is the IRS decided and lobbied Congress to make a law that says any property that's average lease length is 7 days or less is not considered a real estate professional activity. It's just a normal trader business, which opened up the door for vacation rentals to create deductions for taxpayers that can't be real estate professionals. It's normal trader business. You can take those losses as long as you have a few different things, but as long as you mainly materially participate in it. And the IRS tells you what active material participation is, and there's a few hurdles that you can meet. There's a safe harbor amount, but if you materially participate in it, you can take those losses and offset your other income. Now, after the first year that you materially participate and you offset your income, you don't have to keep materially participating in it. You can turn it in purely a passive cash flowing machine. That physician that I explained earlier in the example, he's doing this every year now. So he bought the first property, he and his wife material participated. They got the safe harbor amount. Safe harbor is if you can spend 500 hours a year on this activity, and no one else can spend more time on the activity than you and or your spouse. But they got that. They got the deduction, got the additional 30,000 bonus from Uncle Sam. They turn around in the next year and they turn that Destin property into a purely passive income. It's got a full turnkey management company running it. And they bought a property out in Colorado in the mountains, and they're doing the same thing this year. And this year they're going to get the same benefit. A little bit more expensive a property, so they're going to get a bigger benefit, a bigger tax benefit, but the down payment's going to be covered by Uncle Sam. And this year, since he knows he's doing it, he was able to reduce his withholding out of his W-2. So he actually has the cash in hand now. He doesn't have to wait for a tax refund next year.
It's awesome. And that's where, I mean, we're seeing people take one down payment and parlay it into property every single year and be able to not have to always save up for that next down payment, because they're able to just kind of keep parlaying that same money into a property every single year, which is really exciting. And it's a great strategy to be able to take advantage of if you're in that situation, correct?
Exactly. I mean, that's using the tax laws and the incentives provided in our tax laws to generate net wealth. And you can grow your wealth. Imagine buying $1 million property every year for 10 years. At the end of 10 years, you own $10 million properties that most likely have appreciated greatly, and they're spinning off cash. And suddenly you don't have to work so hard at your day job, and you can focus more on these properties and growing your portfolio more.
Right. And this is what we don't talk a lot about, this side of life publicly and on the front end of what we do. Right. Because first of all, I'm not a tax professional. I have you on my team as an advisor that takes care of all that for us. And we're careful not to overstep our expertise when we're out there talking. But when you start to parlay this with some of these other things that we're talking about, because we're talking about building wealth, investing in vacation homes, and really following that step-by-step process that you kind of talked about before, where you just have a plan, be able to analyze the properties, make sure that they're going to be cash flow producing assets, and you're able to take one down payment and, like you said, buy $1 million property or whatever that dollar amount is for you, buy a property every single year for 10 years, and you're making money with them, and you just can, and you've got this benefit on the back end with the tax advantages and using the tax laws as a wealth building strategy is something that is definitely new to me. And I know that it's new to a lot of the people who we talk to, because not very many people know this or do this. And it's really exciting. And you want to talk about accelerating your net worth and accelerating your wealth building and that lifestyle and financial freedom. This is a strategy that can just put this on overdrive. And it's really, really exciting and available to most people that, like you said, anybody that is making, earned income that they're paying taxes on, which usually those are the people that qualify to buy properties. So, it's a great win. And this is not anything, it's not shady. It's not, it's not in the gray area at all. This is these are very specific rules and that we can follow and take advantage of. Correct?
Correct. And they're tried and true with the IRS, and the IRS recognizes them and allows them. So it's a good deal. I also want to add in on growing your net worth and your wealth. If you're getting properties and you're able to manage them to get 20% cash on cash return, all you have to do is buy 5 properties, and suddenly those properties are providing you enough money to buy another property each year. So if you're able to buy one out of your own cash, and you're able to buy one from the rentals that are creating cash for you, now in year 6 you buy 2, year 7 you buy 2. So you could have 15 properties in 10 years. It really is amazing.
It's awesome. And we talk about, like, one of the problems, I can't remember who asked Warren Buffett. I think it was Jeff Bezos asked Warren Buffett, why do you think most people, I'm going to butcher this. And so if anybody's heard this interview, but the point of it will come across, hopefully. But he asked him, why do you think most people don't succeed with their investing? And he didn't hesitate. Warren Buffett didn't hesitate at all. He says, because they're impatient. And, most people think that a year or 2 or 5 is an eternity away. And it's why people don't do planning. But when you start talking about this, if you had a 5 to 10 year plan, it's life-changing for so many people. And you don't have to be wealthy to put this into play. And quite the contrary, this is saying, okay, we're going to use these strategies to parlay the same money into this. And when I hear you talk about, 5, 10 years, that time is going to go by one way or the other. And so if you can plan it out and strategically do some of this stuff, it's a game changer. And let's talk a little bit about, right now we're recording this in, the end of October, and, we're into the 4th quarter now. And these properties, we have people now calling us and saying, hey, like, I just got off the phone with somebody earlier today, actually, and said, hey, I've got to buy a property. I've got to get it. It's brand new construction. I got to get it furnished, and we need to get it into service by the end of the year so that I can take advantage of some of these strategies. And my question was, why are we doing it now? Because in the conversation, they told me they had a windfall in their business back in April, and they've been thinking about it since April. So they have plenty of time to do it, but they didn't plan it out, And so a lot of people wait and they don't plan, and they think, or they procrastinate, one of the two. They're either impatient and they're just like, well, I'll just do it when I need to do it. And they call us in the end of October, that's pretty tough to do, right, Mike? Because there are things that there are boxes we have to check off, and T's we have to cross, and I's that have to be dotted in order to be able to take advantage of this stuff. And why it's so important, why tax planning is so important. And so that the road you have to run down, and it makes it a lot easier than trying to play catch up. Because
Absolutely.
And so, and some of that is that 500-hour material participation. That's a decent number of hours. It's not, when we start to unpack it, it's actually not that difficult to get 500 hours of material participation, especially your first year, because there's a lot of things that qualify for that. And we don't have to get into all of that stuff today, but you have to be able to, you have to have that material participation. You have to have the property in service, and have it rented out in the year that you're going to take that bonus depreciation, which when you start to so somebody listening to this today, you should be planning this for probably next year, because it's going to be difficult to pull it off in November, December. Right. And I don't know how often, I'm curious actually, how often do you get people calling you this time of year saying, okay, what can I do now? And
yeah, I get too many, mostly new clients. Proactive tax planning makes the difference between being a victim of tax or using the tax law to help build your wealth. I mean, that's the real deal. This time of year, it's hard to do much for tax planning. You should be proactively planning throughout the year. You should be planning for taxes 2 years from now. Yes, tax laws change every day or every year, almost every year, but you should be planning on them. You should be strategizing with your tax planning partner to say, okay, what's going to happen over the next few years? Here's what my plan is for income. Here's what we're doing. How do we mitigate taxes this year, next year, and the years on? And be in constant communication with them. Not constant, but regular, frequent communication to make sure, okay, tax laws have changed. Now what do I do? Or this income stream of my life has changed. What do I do? How do I take maximum tax benefit from the position I'm in right now?
Yeah,
you got to do it. You got to plan it.
And it's exactly, it's all about the planning. It's not saying it's proactive versus reactive. And that's all it is, right? If you're proactive with it, you can use taxes as a wealth building strategy. And that's what I'd love. If you took anything away from this episode, it would be that, is to be proactive with your taxes. And the reason that I want to beat this dead horse as dead as possible is because I was that person that always was reactive. I was always reactive with my taxes for so long. And I've left so much money on the table looking back now, realizing that that's how I operated, because I never wanted to talk about taxes. I was like, I don't want to deal with it. I don't want to talk about it. I don't want, have my CPA deal with it at the end and just tell me what I have to do. Right. Instead of being proactive and planning this stuff out and using it as a wealth building strategy. And it's not just for the wealthy. This is something that we can almost all do. And the only reason I say almost is you have to be earning money to do this stuff, and be, which is, it's only applicable if you're actually paying taxes. So let's talk about some of the changes. We're hearing right now, there's chatter about, some tax changes coming up, and, and like you mentioned, tax laws change on a regular basis. So that shouldn't deter us from any of this stuff. We take advantage of what's in front of us. Usually when a loop closes, another one opens typically, but we've always got to be on top of that. Are there any changes you're watching real close right now?
We still don't know what the tax law is going to be. The Congress has been working on it with the administration for 7-8 months now, and it's at a stalemate right now. So we don't know. There's going to be changes in it. But we know tax rates are probably going up, so that makes tax planning that much more important. We know there's going to be increases in capital gains tax at a certain threshold, which makes it even more important to manage your AGI, your adjusted gross income. That's not a static number. That's something that if you are proactive planning, you can adjust it and keep yourself below thresholds. We know that 1031 exchanges are on the chopping block again. This is probably, I've seen it happen 15 times in my 20 years. It's never gone through. I don't expect it to go through, but people in Congress are asking for that. I think the important thing to realize is every time tax law changes, more opportunities are open. Some are closed, like you said, but every time they've raised taxes, more tax benefits and opportunities have come into play. So don't be afraid of tax law. Don't be afraid of tax law changes. Use it for your benefit. I know most people unlike me, who loves taxes. They hate that idea of taxes. It scares them. But if you can change that paradigm to think, instead of hating taxes, love taxes, use them to build your wealth, use the incentives the government provides us to grow the economy, to grow your economy, to grow your net wealth and your freedom. Financial freedom is huge. And so many people don't have it, and they could have it if they planned and worked on it.
Yeah, and I think a lot of people just too quickly discount the opportunity available to them, that they just think, well, that's for somebody else, it's not for me. And a lot of people are probably pretty surprised. I know a lot of people are surprised that are in our group that we introduced to you, and they're like, holy crap, this is a game changer. I cannot believe that. I mean, their eyes are just opened, and so I'm hoping that we can open some other people's eyes listening to this podcast as well, outside of our little small network, right? And because this is really exciting, and most people should be looking at this and not be afraid of taxes. I used to always be I was one of those people that was so intimidated by it that I just didn't want to talk about it and look at it. And realizing now that there's a lot of advantages that you can take, if you're planning, and if you look at your situation and you're like, okay, I need to structure things this way to take advantage of this over here. There's all those different fun things that you can really strategically do to take advantage of that and build that wealth. And so Mike, I think most people are in agreement that taxes are not ever really going to go down. So anything we can do now to take advantage of whatever's in front of us now is probably going to be more beneficial than waiting until tomorrow and to do it. And so anything on that thought that you would ever share with people there?
I mean, so consider the time value of money. If you have money in your pocket today that you can invest and put to work for you, that dollar is going to be worth a lot more 5 or 10 years from now. So by taking tax benefits now, you're already growing your financial freedom. And there's also, I mean, we're just talking about one tax benefit that you and I are discussing.
Yeah.
This is just one of so many hundreds, if not thousands, of benefits that may be applicable to you. So focus on them, spend time with them, talk to your CPA and ask them, and your advisor. You don't have to become an expert on it. You can find an expert for it, but it's good to get familiar with what's available and what applies to you. And for people who are into lifestyle assets like vacation homes, this is a beautiful opportunity for you. If you're interested in some other kind of area of business, there's going to be other tax benefits available for you. There's so many things you can do. You need to break out of the mold, talk with the planner, and figure them out and take action. Don't react to your taxes getting raised every year. Take action to take advantage of them.
Awesome. Love that thought, actually. Yeah, you're so right. We've talked about one specific strategy, but there are so many, and most people are going to take advantage of multiple strategies. And the key is to be educated on them. And it's difficult. You're probably, you're busy. You've got your own profession, and you're a rock star in whatever you're doing. And so it's critical to have the right advisors on your team, and they'll help you become familiar with what some of those opportunities are for you in your situation. And so on that, I think that's a great spot to leave it with, how people can get a hold of you if they don't have that team built yet. And if they would like to reach out to your team, Mike, and have that free consultation. So we're going to put this in the show notes on both the podcast and on YouTube. But if you want to look up Mike and his company, you can go to, it's Pine Co CPAs with an S. So that's Pine Co CPAs with an S.com/Vodacy. And that'll take you to a landing page where you can have a free consultation. It has some stuff on there about the short-term vacation rental and some of the benefits in this particular asset class with your taxes. But it's way beyond just what we talked about today. Like Mike said, there's going to be, and everybody's situation is so different. I mean, we could talk about so many different opportunities, whether you're a business owner, whether you're a high income earner, whether you invest in other types of real estate or other types of investments. And so those consultations, I would encourage anybody that's interested there and seriously considering using, taxes as a wealth building strategy and you're not quite sure where to start or how to do it and what team you can have, Mike and his team, they're just outside of Dallas and they operate and help people all across the nation. I'm here in Utah and they do all of our taxes, and we've got members across the country who they help. And so is that the best place, Mike, is pinecocpas.com and then /Vodacy? Is there anywhere else people should go or find you guys?
I mean, no, the website's the best. The Vodacy landing page really focuses on short-term vacation rentals. You can look at the rest of the website. It covers other areas in the tax law and other types of investing and tax opportunities. But go to the website, schedule a consultation, and we'll have a Zoom. And let's see if we can't save you some taxes. Awesome,
man. Well, listen, Mike, I always appreciate your time. You become, a great friend and a very trusted advisor on our team and for a lot of our personal clients within Vodacy. And you're making taxes popular again for all of us. And so that's a hard thing to do. It's a hard thing to do to make them popular with me. So it's but really great opportunities out there for a lot of people. And I encourage you listening and watching to go, reach out to Mike and his team. They're amazing. If they can't help you or they don't feel like it's a right fit, or sometimes you might have a great advisor and it still might be worth reaching out to Mike and talking to him. I had an advisor that I still like and trust and used for 15 years, but it wasn't, he just didn't have that same level of expertise. And so we weren't able to find out. I didn't know about a lot of these opportunities. It was more of a reactionary type of an advisor, and not that that's a bad person by any stretch. It just is a different strategy. And so I encourage you to reach out to Mike and his team. So Mike, thank you so much for joining us today. This has been great. And I know it's going to be helpful for a lot of people. Hopefully, I think we just, raise the curiosity and for a lot of people to say, hey, is that really possible that Uncle Sam can pay the down payment on my
it's
house?
Possible.
It is possible. And it's possible and legal, right? A lot of people always think, that's not legal. This is tried and true. And when Mike said tried and true, that's a big statement in tax law. When tax law has been challenged and it's gone through the courts and they said, yeah, that works. And the IRS says, yes, that there's case law to support that. That's when you feel really comfortable, right? That's kind of that bulletproof space where you're like, okay, we feel really comfortable because this has been tried and case law supports it, correct?
Absolutely. And there's no reason you don't want to cheat the tax system. We don't believe that anyone should cheat taxes. We believe everyone should pay every dollar that they're legally obligated to pay, but use the tax law for your advantage. And there is a lot of precedent in the tax court system and in tax law that makes just what we've talked about very, very legit. And it works. It works.
Awesome. Well, again, guys, go find Mike at Pine Co CPAs with an s.com /Vodacy. And we will again put that in the show notes so you guys can find that easily. Thank you, Mike. As always, it's always a pleasure talking to you. And I'm always excited when I hear the stories of the people just keep parlaying that down payment money, building that portfolio of vacation homes with Uncle Sam's money is pretty exciting. So thanks again for joining us. Guys, go make it a great day. If you got anything out of this episode, go share it with somebody you know that like it. Subscribe to our channels. That stuff does make a difference. Leave us a review. And we'll plan on seeing you guys same time, same place next week with some more great content. And as always, go do what you can. Pick one thing today that you can go do to build the life that you don't want to take a vacation from. Talk to you soon. Cheers, my friends.
Thanks for joining us on this episode of the Vacation Rental Revolution podcast. Share this with other people you think need to hear about it. And don't forget to subscribe and leave us a review. Hey Grace, is there a website? Yes! For more amazing content and expert advice, visit Vodacy.com. Thanks for listening, and we'll see you on the next episode.